Sup traders, how y'all doing? Welcome in. In this video, we're going to be comparing dip buying strategies to breakout strategies using computer backtesting. So if you're a trading nerd, you're in the right place. The space is full of people just giving opinions, and I'm going to show you computer backtesting and go under the hood and play around with different settings and parameters and show you something that might surprise you when comparing breakouts and dip buying strategies over time. So welcome in, fam. Much love, Trav here. If you don't know me, I'm someone in this space, the trading space, who makes trading systems fundamental top-down, and I turn them into computer models with computer backtesting. And something that makes me different is, okay, so first of all, it's rare you even see any computer backtesting. It's just people's opinions. You don't need to take my opinions. You can base off what the computer backtesting says. But where I have an advantage over most people showing computer backtesting is most people will show you computer backtesting with one asset over one period. And the problem with that is just because it worked for 2 years on this one asset is no evidence that it's going to work over the next 100 years on another asset. So our system, I'm going to show you, it worked for the past 100 years on gold, which is the backtest that's on screen. It worked 40 years on NASDAQ. It worked 10 years on Bitcoin. Those are the three main asset classes we trade: precious metals, cryptocurrencies, and indices. And it worked well on all of them. It didn't just work well on the NASDAQ. It also worked well on S&P 500, the Japanese stock market. It didn't just work well on gold. It worked well on silver, platinum, etc. So I'll show you. You don't have to believe me. This backtest goes back over 100 years on gold. It turned $100,000 into $13 billion. The green line is our system, and the blue line is buy and hold. 52% of trades were profitable. Here, the max drawdown was 64%. I'm going to turn down the risk settings so we don't have such big drawdowns. And I'm going to quickly show you the NASDAQ and Bitcoin, and then we can move on to comparing dip buying and breakout settings. So here all I did is I reduced the position sizing. We see 100,000 into 300 million. Now the max drawdown is 30%. Same number of profitable trades. Let's go and look at the NASDAQ going back 40 years. So here our green with this position sizing is roughly comparable to buy and hold, but we only had a 30% drawdown on max drawdown, whereas the actual NASDAQ had an 84% drawdown from 2000 to 2002. So our risk-adjusted returns are far superior. And the last one we'll look at is Bitcoin, where we average trade is 134% is crazy. 100,000 into 84 million. 2.0 profit factor. 60% of trades are profitable is awesome here also. 49 total closed trades. Yeah, 60% drawdown compared to 84% drawdown. So let's start with gold and let's compare. So here's my indicator, and I can go into my indicator, and you can see trigger 1 is dip buy, trigger 2 is breakout buy, and trigger 3 is failed breakout. So we can isolate by turning one off and looking at the other. So first, let's look at the dip buy. Let's turn off breakout buy and just have dip buy. So dip buy is really good. I mean, max drawdown of 14%, net profit 3,700%, 5.6 profit factor, 72 trades, 54% profitability, 252 average bars in trade. So 14% drawdown for 3,000% return. Let's now look at the breakout strategy and see how it compares. Breakout strategy. So risk adjusted, we have 18,000 compared to 3,000, but we have a 30% drawdown. So let's set our drawdown at, what was it, like 13, 14% and see. So actually here it shows the dip buying is outperforming, which is surprising. I'll tell you what though, this is very important. So the SMA is really important. So if we look at the dip buy, let's look at just the dip buy, and I'll show you how important this is. So this is what the dip buy looks like. Okay, we bought here. This one's still open. We bought here, kind of got added more positions, got stopped out around break even on that. Couple big winners here, buy, stopped out, buy, stopped out. And this works going back 100 years. The bull run in 2009 was pretty insane on gold. Now let's go ahead and look at the 200 SMA. So this is really important. So we have a couple filters that keep us out of dip buying trending market, downtrending markets. The first one is the SMA. We have this checkbox that if price is under the 200 SMA, we cannot trade it. Also, we're looking at old monthly calendar lows to recover them, lose it and recover it as a trigger. But the day needs to be, that level needs to be between 15 and 90 days. Because if it's too soon, we're just falling out. If it's too old, nobody's looking at that level and we're taking old levels. But check it out, 14% and 3,000%. Let's take off the 200 SMA. Now we have 5,000% yes, but our drawdown went from 13% to 47%. So if we set our position sizing smaller, and by the way, this is the only thing I'm changing here is the position sizing, back to 14%, we have a 300% gain compared to a 3,000% gain. So trading only above the 200 SMA on dip buys literally 10x'd our results. Went from 300% gain to 3,000% gain. We would have sidestepped a loss like that. What other losses would we have avoided? Let's try to find a downtrending market. Yeah, the dip buying that happened in the 90s. See this loss, 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 loss. This is why you need to not dip buy under the 200 SMA. Let's turn the 200 SMA back off. I'll put it back on and look. Okay. Saved us all those losses. Really amazing how just changing one thing. And this is the important of not just having computer backtesting, but being able to have like an infrastructure. So our indicator it's really not just an indicator. You can see it's a whole infrastructure for backtesting, different strategies and combinations of strategies where we can customize our entry, our stop loss, longs and shorts. A really awesome tool for backtesting. And yeah, our best strategy within this is really good. Now let's go back to breakout buy only. And I'm going to show you how it seemed like the 200 SMA doesn't matter as much. So let's put the position size back up to 40% of equity. So here we have right now 28% drawdown for 18,000% return. Let's turn off the SMA and see what happens. So our drawdown actually didn't change. It was still at 28%. No, sorry, I was clicking on the wrong one. Okay. Change it to turn it off. And now our drawdown went to 44%, and we went from 18 to 15. So actually the SMA is really important as well. So let's go ahead and see what changes when we turn this SMA off. See, it tries to take some breakouts in these downtrending markets. And if we can turn these off. So one thing, and you've been seeing me talk about this a lot, is the SMA is really important. So turn the SMA filter off, and that saves us from a lot of losses. Now let's move on to NASDAQ and then finally Bitcoin and go take a look. Okay. Look how important this SMA filter is for just staying out here. Yeah, maybe we missed the bottom, but it worked awesome. It's really important. So let's go ahead and look. Let's turn the position sizing up. You have to use more leverage for the NASDAQ. Okay, so right now we have just the breakout buy on. 50% profitable trades, 200 trades. Max drawdown 47% for a 3,000% return. Okay, so 47% for a 3,000% return. Let's check the dip buy. Well, I was wrong with what I was saying. Is the dip buy is actually outperforming, but the SMA is really important because I said 40,000, 4,000%. Yeah, the drawdown is less and the return is more. So I was wrong on that, but I'm fine being wrong in front of you as we learn and we discover. But again, I'm going to show you how important the SMA is. So right now we're at 40% drawdown with 4,000% return. We turn the SMA on, and we did 10x our results, but we have a 73% drawdown now. So let's set the drawdown back to 40%, 40%, see where we are, 3,000%. So I'm not sure it actually made that much of a difference here, right? We're at about a 40% drawdown with 3,000% return. SMA filter is on. Turn this back up. 40%. Yeah, it made a difference. It didn't make as much a difference. So we went from 3,000 to 4,000% return. And then our win percentage went from, with it on, is 46%, drops to 43%. And our profit factor is 3 instead of 2. So it matters. It's not quite as loud as the other one. So now let's look at the breakout buy, where here we have a 47% return, sorry, 47% max drawdown with a 3,000% return. Let's try the SMA filter. Oops, that's the wrong one. Let's check it out. Turning it off puts our drawdown to 67%. So let's get our drawdown here back to 40 to see, 47, and see if we can beat 3,600. Okay, so change our position size, fix the drawdown to, yeah, so it's already more drawdown. So the SMA does matter. But yeah, what I'm discovering is that the dip buy is maybe better than I thought, but the SMA fixed it because we didn't have that filter. So let's take a look at the dip buy only for Bitcoin. This one only goes back 10 years. It says max drawdown 527%. I feel like that's an error because I feel like that's a bug. 70% drawdown for a 600% return. Let's assume it's not a bug, but I think it's bugging. I just don't have SMA filter on the other version. But we can see we blow up without the SMA filter. So that's important, but it's showing 70% drawdown for a 600% return. Let's go ahead and look at the breakout buy. 20% drawdown for a 3,000% return. So if this isn't bugged, it's showing huge outperformance on our breakout strategy. And it doesn't mean breakouts are better than dips because we can modify the dip strategy, but that's the combination of parameters I found work the best. We'll see how much the SMA matters. Right now at 20% drawdown for a 3,000% return, 3,500. Turn it off. I keep doing the wrong one. Turn it off. 28% for a 4,000% return. So I think if we do risk-adjusted return, bring it back to 20%, yeah, it's better. So I mean the SMA matters, but yeah, here's the first evidence that it does matter to have dip buy or breakout buy being better than dip. But I mean, you can, with probably matters for Bitcoin because buying the dip, it's easy for it to just dip for years. So if you're just in the market during breakouts, you can actually outperform buy and hold. And look, you're just not in here. Oh, the filter's off. And check it out. Also, we have a short filter. So if we turn on the failed breakout, if I take off the TP for Bitcoin, at least it works better. Just sit in the short forever would be pretty baller. So yeah, I mean, what did we learn here? depending on the asset, breakout buying or dip buying might be better, but very important to not dip buy under the 200 SMA. And that's a key to avoiding, and this is historical, again, going back 100 years. Avoid this bear market, don't participate. Avoid this bear market, don't participate, or participate on the short side. Same with NASDAQ. Avoid this bear market, don't participate. Let's look at what other bear markets we had. Avoid this bear market. No, we don't get the bottom, but we're out this whole way through, right? Same thing with this. Avoid this, don't dip buy. This is how you blow up. Just do something else. So pay attention to that. Anyways, hope you found that helpful and useful. And yeah, if you're interested in trading our system, there's a link down below. You can sign up. Okay, appreciate you. Much love. Talk to y'all soon. Peace.